Hi there, my name's Tony. Grantham is home for me. It's an area that I've lived in for many, many years. The kids go to school here, we shop here, we do business here. I've been spending some time in the last couple of months speaking to people who have been nominated to my page, Grantham Local Heroes. Today I'm delighted to be joined by a gentleman who has been nominated to the page, a gentleman called Mr. Neil Buckley. He is the Managing Director of NNBC Financial and YMP, which is shortened from Your Mortgage Plus. Hi Neil, how are you?
Hi Tony, how you doing, mate?
I'm very well, thank you. Thanks for asking. Yeah, very well indeed. You were nominated towards our page, Neil, because you've been doing some fantastic things for people. What have you been up to?
Well, during the crisis and everything else, there's been a lot of stress and strain put onto the SME business community. And, you know, with running the commercial side of my business, people were put under real significant financial strain, but also feeling a lot of stress and pressure. So I've been engaging with the SMEs on a daily basis from Nottingham, from Grantham, from all around Lincolnshire, that people have been recommending me to discuss things. And really, I've been doing a lot of hand-holding and giving advice. That advice has been around the government schemes, whether it be bounce-back loans or C-bills and everything from that perspective. And sort of been doing this on a pro bono free basis to help support them. But I think the real important critical thing that I've been doing is holding people and giving people the support through this this time, which is listen to them, take their stories, their frustration, because things haven't gone smoothly. Whatever the government said with loans haven't come in on time and everything on those standpoints. So it's been a very stressful time for the SME community out there. And so just to be able to give that bit of support, it has been what I've been doing for the last couple of months.
I think that's incredible, because I think the one thing people need at a time like we've been through and still going through is probably support rather than being sold to, isn't it? They want your advice and guidance and support, and you clearly have been doing that for these people.
Yeah, and you know, and it's thoroughly enjoyable actually, knowing that you're actually giving things back. And it's, you know, the philosophy that I have for my own company anyway, and it's, I've walked the walk, if you like, for the last couple of months, and that is, you know, the client, the customers come first, engagement with those, and revenue generation will follow. Okay, so I'm not predominantly focused on the revenue generation. I know that will come if you treat people fairly and you engage correctly, and you know, and literally just standing by, listening to people and letting them get it off their chest, because they really don't have anywhere else to go. And being able to apply my experience to help them is great.
A couple of things I've picked up from that, and I'm a big believer in this myself, you know, the gift of giving without the expectancy of receiving. I think you're right, it comes in time organically, but I think it's always a good mantra to live by. And I suppose you must have also been helping these people, and they must have had so many sleepless nights, perhaps before they're able to vent and get it off their chest and see a way out. And you've probably given them that light at the end of the tunnel so they can start to, I suppose, enjoy life a little bit more, because you know, the one thing's for sure, money is a stressful thing, isn't it?
It is, and running your own business, and when you've got to pay salaries, and you actually, excuse the dog, you know, when you actually have to, you know, basically make payroll and pay bills and everything from that perspective. And a lot of SME communities do not have a cash reserve because of the nature of the business they do. And literally, it's pointing them in the right direction, and several for cheap funding. So I can give you loads of examples, but even pointing someone to an interest-free credit card, of saying they've got a short hole, and it's like, go over there, you can get 3 months, 3 years, interest-free, boom. You can take it off as cash or pay off your other credit cards or whatever. And they hadn't thought about it. And one of the things that it's expectations on small business owners is they're very, very good at what they do. That's their core. That's what they do for a living. They don't have a broad picture. So they rely on other skills surrounding them to sort of guide them. And, you know, and I don't think we, definitely in the financial business, do enough of that support.
And I think that's a very fair admission as well from somebody who works in that industry.
It is, and you know, and it's one of those things. I spent 35 years in the corporate world doing this sort of stuff, and you know, literally, it's all focused around numbers, and it's not. It's about people.
All about people.
It's all about people.
Yeah, yeah.
And that's where we need to focus. And you know, and that's really the mantra that why I started up on my own and starting building my organization is around that mantra.
Right. I think, well, on that basis, if people always want to feel like they're being guided and advised in the right way, it's going to pay you dividends, isn't it, in the longer term? Like you said, it's that build, the revenues will come, provided you obviously, you know, like I said, put your arm around people or hold their hand through this, virtually hold their hand now, can't you? You can't hold their hand.
You've got to, well, you can't, no. But you've got to, you know, the whole thing, and is you being totally honest, have integrity and transparency, okay? And if people feel comfortable engaging and talking, and they feel, you know, they feel they can build a relationship with you,
completely,
then that's great. You know,
not about short-term wins; it's about clients for life, isn't it?
It is, and it's about friendships for life, because the clients actually start engaging more on a friendly basis.
Yeah.
And over the last couple of months, I think I've made loads of different friends, and they, and seriously, I say to them, I'm open 7 days a week. Just give me a call if you need to, and they do.
Good.
You know.
So how long have you been operating now? Like you said, you were in 35 years in the corporate world. How long have you been, you know, running your own business now?
Now it's like 18 months. I've started up my own business. It's going well. I'm just in the process of hiring another 3 people.
Wow.
You know, so we're moving forward, which is good.
Yeah.
And it's very interesting. The Midlands and the East Midlands area and around Lincolnshire, and you know, and going and bringing Nottingham and Lincoln and everything else as well, is a real growth area. Okay. And I think basically, and you know, my view is from the major cities, we will start after this virus epidemic, people will start migrating out of city centres.
Yeah.
And I think we're in a prime location from a communication perspective.
Yeah.
So I have real high expectations for this region. And, you know, it's people and the work that will be coming in this general direction.
Absolutely. So how long have you been in the Grantham area?
I'm actually originally a Stamford boy, born and bred in Stamford, and then went on my worldly travels to London, New York, Tokyo, and Amsterdam.
Wow.
Sort of during my little mission out there. And sort of when I came back, I moved up to the Grantham area. We've been here 6 years now.
Yeah.
So
enjoying life here?
Yeah, I am. And my kids are settled down here, and the wife's happy here, and it's a great community. And I can't go anywhere without people knowing the wife, so it's quite.
Yeah. Oh, really? Happy wife, happy life, isn't it? Yeah, very
wonderful.
So I suspect your business communications or your contact with SMEs recently has been more NNBC financial, I presume, has it?
Yes, it has. But saying that, you know, the two actually branch over. The joy of dealing with commercial and business finance, but also the residential, whole market residential and protection, is the two actually run very in parallel. The amount of times I talk to commercial business owners that actually then turn around and say, well, I need to do something on my personal side to raise equity.
Yeah.
Or you're talking on the residential side, oh, I need to do something for my business. Yes. And the two couple very, very nicely together. You know, and on the business side, if you look at it, you know, the commercial property perspective, that's a very tough market for people to get into. And the amount of security that's required, or, you know, we have this wonderful growth area called buy-to-lets. And, you know, it is growing again, where we thought when they changed the regulations, it would shrink a little bit. However, it seems to be growing again. And when you look at that people are actually combining buy-to-lets with commercial property and building up portfolios. And sometimes they're regulated, sometimes they're commercial and non-regulated. So it's good having both tools in the box.
Great. So you must come into contact with quite a few, like I said, commercial landlords and I guess residential landlords as well with portfolios.
Correct. Yeah.
Yeah. Yeah.
Yeah. I've sort of been, and some of them are actually huge portfolios.
Yeah. Yeah.
That they built up over the time, and I'm absolutely staggered at some of the size of some of the landlords, in terms of tenants.
Yeah.
You're talking 9, 10, 13, 14,000 tenants.
Good Lord. Really?
I know, and they're out there, and to me that's a scary proposition.
Sounds like an administrative nightmare to me.
Oh yeah, definitely.
A legislative nightmare as well, because there's so much regulation, isn't there, surrounding
there is
tax now and everything else. Yeah,
there is.
So you obviously do residential mortgages. So obviously the people who are perhaps watching this may well be local homeowners and tenants, perhaps thinking about buying their first home. I mean, could you give us any tips on perhaps becoming mortgage ready?
Yes, and that's a very good point, actually, Tony. Is mortgage ready is very important for people to get to. For the generation that have been in there and had mortgages before, and they're looking at remortgage and everything else, that's all pretty good. And a lot of people will remortgage in that older generation to either pay off debt, raise capital, or anything from that perspective. Or if you go to the older generation, it's equity release and everything else and that, which we do as well. But when you're looking at the younger generation and the self-employed and the SME community, the one thing, just by the nature of their age and the business they're doing and everything else, historically, and I'm not generalizing here, so don't take it, it is a generalized statement, but don't take it as general, is that people don't focus on the credit report. Mm-hmm. They don't focus on credit worthiness because when you're young, you like to live life. When you're running a business, you sometimes have to borrow from Peter to pay Paul and things like this. So you build up, and it's not very clear. And so for the younger generation, I would say take advice, get a copy of your credit report. If you don't know how to get one, get hold of someone like myself. We'll tell you where to get one for free. And then go through that and take the advice, and it's free. Okay. And if anybody contacts me, it's free. And we'll go through the credit report and tell you where there's gaps and what you need to be able to get a mortgage, or if you can get one straight away and how much you can borrow. If you're self-employed, people get worried about, I've got to have 2 years accounts, 3 years accounts, whatever. Again, credit reports, sit down, talk to people, someone like myself. We'll give you the advice of what you need to go and get a mortgage. And really manage the expectations. And it's very key you understand that up front. And so, because you can work on it, okay? And it doesn't take long to correct the credit report. They're updated every month. So you can start early. And start getting yourself
putting some more building blocks in place to make a better looking, because that's what the lender's going to look at, isn't it? The lender's going to look at, in most cases, the credit file, aren't they?
Basically, they look at the credit file and they look at affordability. Okay. Now, one of the misnomers on a credit file is that people sort of worry about is that they've got too much borrowing, like loans and credit cards and things like this. Well, it can be if it's too high, but having loans and credit cards are good things, because if you're up to date and you're keeping up to date with your payments, lenders will actually view that as being very good, and you can know how to handle credit. But you don't take it to 100% of its limits. Indeed. And so it's knowing these little things that you can tidy up on your journey to get prepared.
Sure. I've looked at my credit file, and they always sort of talk about less than 50% of your credit availability being in use. Is that fair?
That's the general rule of thumb. That's what the credit agencies look like. But there is one thing as well, that looking at Experian or looking at Credit Karma or More Money Supermarket or any of these credit reference agencies is one thing. The bank also has its credit scoring internal to each lender, has its own score.
It's quite unique to each lender, is it?
To each lender. And basically, they will take the publicly available credit scores and they will apply their own rules to that. So there's 2 steps. Yes, having a perfect credit score at Experian is great,
Yeah.
but will you pass affordability and everything else
Yeah.
at the banks, at the lenders?
Just one thing that I've always been made aware of as a, working in the industry, obviously they pay particular attention now to outgoings to ensure that, that you've got enough to be able to pay the mortgage after you've paid all your food bills, everything else. And they also look at things now as if interest rates were to rise to a certain percentage, whether affordability still exists.
Yeah,
but
that's the stress test.
Yeah, but I also understand that, and this might be useful for some who perhaps are out there at the moment, is if you have a regular commitment of, let's say, I don't know, £10 a week on the national lottery, for example, that becomes part and parcel of your regular commitments, doesn't it? And therefore, it has an impact, doesn't it?
Yeah, and this is one of the things that basically in the world we live in, and it's one of the advice I would give to definitely people, is not to have gambling sites listed on bank statements or credit card statements or anything along those lines, because the banks and the lenders are not happy having people gambling. That's a no-no. The lottery is fine. Yes, it becomes part of regular commitment because it's a standing order or whatever. But when people start going to these online gambling sites and they start spending significant sums compared to their income, that becomes a problem.
So just thinking then onwards again, for those who are watching this in tenant land, in home buyer land, wherever they might be, how many months bank statements get scrutinised so they know how many months they need to perhaps look at? 3 months. 3 months. So if they were to have that Bet365 account, they spend £5 a week on what used to be football accumulators. Then perhaps having that out of there now and paying it by a different way, perhaps going to the bookie itself and paying £5 cash. Wouldn't be as noticeable on your...
Yes, it wouldn't be as noticeable or anything else. But the one thing, and I'm not sure when this will happen, at some point, the credit reference agencies will have hookings from the gambling sites. You can see it, and the lenders. As the way technology is evolving and the amount they're clawing from the data. So even having the account will be flagged.
Sure.
So
for those who
it's one of those things to be aware of.
Yeah. For those who are tenants right now, does the fact that they pay their rent on time in full have an impact?
Yes, it does. It's really key that when the lenders actually look at your bank statements, a lot of lenders will, particularly with first-time buyers, they'll look at the rental contract they have. They'll look at the bank statements. They'll tie up with the rent, the dates, and everything else that they've been paying on time. In some cases, and they do this randomly, they'll take a reference from the landlord. And so again, that's random. It might be 1 in 10. They might do it with or whatever, but they will check that you are meeting your commitments.
Okay, so that's actually the bank's investigating that rather than it being something that's visible on your credit file as such.
Yeah. So basically, I would look at that anyway up front. So I would sit down and go through the bank statements, and I'd tie it to credit reports and everything else, and what the client has actually told me with the fact find, to tick and tie all the information. And then I would submit that to the bank, and they would look at that as well. And hopefully I picked everything up by the time it's hit the bank, and everything I can defend.
And in the main, we were talking before we went live, but in the main, you were suggesting that, in most cases, you can get people placed for a mortgage.
Yeah. I mean, one of the things which is very good, I mean, because I deal with the whole market, it's all mortgage lenders from high street banks through to challenger banks through to mortgage specialist lenders and everything. So we can go everywhere. And we look at it in like a tiered system. There's tier 1s, there's tier 2s, and there's tier 3 type lenders. So, and though as you go down the list from 1 to 3, interest rates go up, because the risk gets higher for the lenders. We still can deal with discharge bankruptcies. We can deal with IVAs. We can deal with CCJs. We can deal with a lot of things that are out there. It depends on the exposure. If you're in a debt management plan for 40 grand, that's going to be a bit tricky. But for most parts, there are lenders that we can go to.
Sure. And when you're looking now at remortgaging, is there a sort of loan to value percentage you need to be looking at as a maximum?
Well, it's interesting coming off the back of the virus, the COVID-19, and I'm going to throttle that dog. Yeah.
Don't do it live. Don't do it live. Cut that bit out. We can cut that bit out.
Okay. I'll get him.
Start again.
Toodles. Go. During this crisis that we've been going through, the banks, because the valuers could not get out to the properties, reduced the loan to value so they could actually keep lending to lower amounts to manage the risk. But they didn't do it on new properties because there's no history with the property.
Yeah.
So you could only remortgage for 65, 75 to 75% loan to value. However, now since last week, the valuers have started going out again. Already the lenders are coming up at 85%. They are increasing their loan to values. There's no reason to think that someone with good salary, good credit history cannot remortgage it, up at 85, 90, 95%.
Sure.
Okay.
What's the thinking at the moment on those who have perhaps been furloughed and are on 80% money at the moment, and they were looking to take a mortgage soon?
Well, that again is something that I personally got frustrated about, because literally people who were given commitments by lenders prior to the pandemic based on full salary, were contacted by some of the lenders and asked if they were furloughed. And if they said yes, the lenders were adjusting their salary, dropping it by 20%. So their affordability changed, which I didn't think was quite right. But that's one thing to be aware of. If you're furloughed, fine, be open. One of the things with all lenders, just be open and transparent, okay? A lot of the employers are actually making up their salary to be 100%, or they're actually deferring the 20% salary until they go back to work or anything like that. So all the circumstances are different. The one thing I will say is just be open and honest. And, hopefully we're coming to the end of the furlough in June, July, and people are all back up and running and working. And, and they're back to full salaries.
Sure. And do the lenders look at perhaps the last specific month, or do they take 12 months pay slips? I mean, what are they looking at as a time
They
period?
take, on the pay slip side, they look at three months pay slips.
Okay.
And
so
of course,
if you were furloughed and finished furlough in, let's say, the end of May, for example, but then we were into August, you probably wouldn't have any impact at all then?
It shouldn't have any impact, no.
Yeah, great. Okay.
So, and then for the self-employed, they should be looking really at sort of a rule of thumb is 2 years worth of accounts. Okay.
Sure.
Now, not hard and fast, but there are certain lenders that you can do with 1 year's set of accounts if credit worthiness and affordability is all there. So again, that's something that you have to look at closely, see if we can do something.
I need to make sure these small businesses are putting through the right numbers to the tax man, don't they? Because of course, maybe cash in hand jobs, it's all very well and good at the time, but it has an impact on your mortgageability, doesn't it?
Yeah, and that's actually, I've had so much frustration for the small business owners that effectively, because their accountants advise them to take dividends and not take salary and balance all of this, then their salaries are very low. So when it came to furloughing and everything, then it suddenly sort of said, okay.
80% of not a lot's still not a lot, is it?
Exactly. So, but it's one of those things for people, isn't it? You can't have it always.
Sure. Neil, if people wanted to get in touch with you, how could they go about doing so?
Oh, they can go to my website, which is www.nnbcfinancial.co.uk, or they can call our 0800 number, which is 0800 009 6066.
Sure.
Or they can call me directly or email me directly, which is neil@nnbcfinancial.co.uk.
Great stuff. And you have a Facebook page as well, don't you?
Yes, I do, which is NNBC and YMP.
Okay, and they'll find you if they search that out, and then they can perhaps
Yep.
direct message you
And
if they want.
if they can send me a message on Facebook, LinkedIn, Twitter,
Yeah.
I'm on all those platforms as well.
Great stuff. Well, Neil, I've really enjoyed my time with you this evening. Time's actually rocketed by. I hope things obviously continue to look great for you in the future, and I look forward to catching up with you at some point very soon.
Well, that's terrific, Tony. Thank you very much for spending the time with me. That's great.
My pleasure.
Thank you.
Look forward to seeing you soon. Cheerio.
Cheerio.